Hi, I'm Kalilah Reynolds and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to takingstock-ja.com to subscribe to our newsletter. You can click the link up here or in the description box below. Now come on, let's get this money.
First up, is sugar dead? Manufacturing and distribution companies like Seprod have rid their hands completely of sugar. Was that the right choice? In this special feature, Kalilah Reynolds took a trip to her home country Belize to explore how they've been able to sustain their sugar industry even amid challenging times. And later, the analysts weigh in on the latest market developments, the worst quarterly decline since the formation of independent Jamaica. The Statistical Institute of Jamaica STATIN has released data showing the economy contracted by 18% for the second quarter of 2020 between April and June. This means Jamaica is officially in recession. And Sygnus gets the nod from shareholders to prepare its additional public offering. We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
Global markets and U.S. stock futures were in a frenzy last Friday after news that U.S. President Donald Trump and First Lady Melania Trump tested positive for COVID-19. The president announced the news in a tweet at minutes to 1 a.m. All three major indexes declined, led by the technology-infused index NASDAQ, followed by the large-cap stock index, the S&P 500, and then the more traditional blue-chip index, Dow Jones. Only the Russell index of small-cap stocks gained ground on the day. Stocks in Asia-Pacific and Europe also slid on the news. Oil futures also tumbled Friday morning to settle at $37, down from $40 at the start of last week's trading. The Statistical Institute of Jamaica STATIN has confirmed that the economy contracted by 18% between April and June this year. The official data from STATIN confirms earlier estimates from the PIOJ, which hinted that such a contraction was coming. The country contracted in the March and June quarters down by 2.3% and 18% respectively. Some pundits include the December quarter, which registered 0% growth, but contracted slightly by a few $1 million when analyzed from a value perspective. Regardless, the continued spread of COVID-19 and the measures to combat it are cited as the cause of the recession. Finance Minister Dr. Nigel Clark has described the current situation as the worst quarterly decline in Jamaica's history. According to STATIN, the services industries declined by 20%, while there was a 13% fall-off in the goods-producing sector. Sygnus Credit Investments shareholders have given their nod of approval for the firm to approach the stock market for fresh capital through an additional public offer APO. The approval was given at the company's extraordinary general meeting last Friday. The amount of funds to be raised from the APO has not yet been disclosed. However, the company wants the funds to finance its pipeline of investment deals and also wants to pay down on debt. The prospectus will be released soon. Meanwhile, Diamond Trading shareholders have also approved an APO of shares. The approval was given at the company's annual general meeting on September 25. The resolution authorizes the company's board and management to issue up to 1.8 billion new ordinary shares to the public. The company will use the funds to finance its expansion and to write down debt. The APO is expected to hit the market before mid-November. The Bank of Jamaica BOJ has announced that it is holding the policy interest rate unchanged at 0.5% per year. A low rate aims to incentivize businesses to borrow as a fillip to grow the economy. The central bank said that keeping the rate stable would aid the weak economy while still allowing the country to keep inflation in the single-digit range of 4 to 6%. The policy interest rate is offered to banks as a wholesale rate to get funding cheaply and then on-sell to businesses. The next policy decision announcement date is November 17. Palace Amusement closed two of its cinemas, Palace Cineplex and Palace Multiplex, last Wednesday as a result of the impact of COVID-19 and the continued restrictions placed on the entertainment sector. Palace Amusement said the pandemic has worsened operations at Palace Multiplex in St. James, which was previously impacted by the zones of special operations and states of emergency in the parish. It said the pandemic has also created a severe effect on Palace Cineplex in Ligoni St. Andrew, with attendance at 0 on some occasions. Palace said it continues to closely monitor conditions and will advise of any new developments.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. And when we come back, I'll take you to the Caribbean's top sugar producer, Belize. This segment of Taking Stock is brought to you by Bulwark Insurance agent. Insurance made easy. And Massey United Insurance. How good is your insurance? These are the cane fields that our ancestors toiled for centuries. Blood, sweat, and tears. Sugar, the historical backbone of the Caribbean. But now the industry is facing a crisis across the region. Can it be rescued? I'll take you on a journey across the sea to find out. Belize, with a population of only 350,000 people, has emerged as CARICOM's leading sugar producer. The sugar industry here grinds 1.3 million tons of sugar cane each year, milling an average of 6,800 tons every day. The sweet commodity is of vast economic importance, supporting 15% of the country's population and contributing around 5% of gross domestic product (GDP. About 30% of Belize's foreign exchange receipts come directly from sugar exports. But how have they been able to make it work when others in the region have been exiting sugar over the past decade? Since the collapse of preferential prices on the European market, only Belize, Jamaica, Guyana, and Barbados have remained in sugar within CARICOM. Jamaica has consistently been shedding production each year, with major manufacturers Seprod and Appleton Estate the most recent to exit in 2020. Seprod CEO Richard Pandohi told Taking Stock recently that his company alone was projected to lose up to 400 million Jamaican dollars, or nearly $3 million from its sugar operations this year.
I think we need to move on. I think the environment has changed dramatically. When we lost the preferential pricing agreement out of Europe, it drastically changed the whole economics of it.
So what makes Belize the exception? Belize's sugar industry has also had its fair share of struggles. After years of financial woes, American Sugar Refining, ASR, bailed out Belize's ailing sugar industry in 2012, paying off BSI's $65 million debt in exchange for 78% ownership. ASR, an American multinational company, also owns sugar mills in the United States, the Dominican Republic, and Mexico. In the past decade, hundreds of millions of dollars have been invested in Belize's sugar industry, both by ASR and another multinational company, Santander Group, with investors from Guatemala, Spain, and elsewhere, according to its website. Santander also entered Belize in 2012, initially under the name Green Tropics. Since 2015, they've invested some $250 million in Belize's sugar industry. For second-generation farmer David Ackerman, these massive investments by large multinational players have given him confidence that the local industry can not only survive, but thrive.
They're the big hunchers with the big dollar. That's okay. But if they're risking, because they're risking, if we fail as farmers, they fail. So we cannot afford to fail, because then the industry fails. They will eventually look at Belize as not a viable ground. I mean, they just spent $22 million. They're going to spend another $50 million in this climate. Are they willing to take the risk? Yes, they're willing to take the risk. So if they're willing to take the risk, I'm willing to take the risk too. Mm-hmm. And I encourage the small guys with me. I said, listen, let's stay on board.
This is where agriculture meets industry, where literally months of hard work is offloaded, and it's up to the factory now to convert it into that sweet commodity demanded worldwide, sugar.
I think one of the first recognition we need is that agriculture is a business, whether it's for the very small farmer or if it's for the large multinational operation. It is a business.
The business of sugar depends largely on the quality of the cane, the ability to squeeze as much sugar as possible out of each magnificent stalk. To achieve that, the bulk of the investments have gone directly into agricultural technology. They've made heavy investments in mechanized farming and GSI mapping. Olivia Avilés is the Cane Farmers Relations Manager at BSI ASR. She explains the benefits of moving to mechanical harvesting.
Mechanical harvesting is a little bit more efficient, and because we are harvesting in volumes, then it makes the operation more efficient. Number one, with mechanical harvesting, you cut out the loading cost. For manual cane cutting, you have burning, you have cutting, loading, and transport of that cane. For mechanical harvesting, if you're going to burn, sometimes you don't burn because sometimes it's green harvesting. So if you're going to burn, you have the burning, you have the cutting, but you don't have the loading. When you're cutting, you're loading at the same time. So it's one cost, and then you have the transport and delivery. So we increase efficiency both at the loading area because we cut out that loading rate, and we increase our efficiencies at the truck and delivery aspect of it.
According to Aviles, not only does this reduce the workload for farmers, it also reduces cost.
One of the key aspects there is to reduce the cost of harvesting for farmers. The normal manual cutting harvesting is around $30 Belize per ton, and this service is able to go for around $24, $25 Belize per ton. So that's a $5, $6 difference per ton of cane. Now with that extra money or savings, they are able to do some other things in the field or sustain their family, whichever way they are working their business.
Belizean farmers say mechanical harvesting has saved them time and money.
I did the math. I'm saving 30% on my costs, my harvesting costs.
I entered in this pilot project with the mechanical harvesting 2 years ago, which is much cheaper, approximately an average of $5 per ton cheaper than with the contractors who would charge you $29, $30.
And contrary to popular belief, Ackerman, who manages more than 400 acres, says it does not ruin the land.
I went back and checked that work that I did, and I found that there was no loss as to what the myth, what was like out there. The early field management that we did, oh no, the field was recuperated very well, and it wasn't a new field, it was a field at least 8 years or 9 years old, you know, and so this guy is going to harvest again, and the field is in good shape again.
In addition to mechanical harvesting, Geographical Information Systems, GIS, are used to map fields and evaluate their performance.
We're introducing GIS to small-scale farmers, and that is a very, very powerful tool. They are able to map their fields. If they have 4 acres, then they know that it is 4 acres, and if a service provider comes and tells them, I'll charge you for 6 acres because it's 6 acres, they can quickly say, no, this is my map of my area. This has been GPSed by the industry and it is 4 acres. So that's item number one. They need to know what land area they have with the proper tools.
Mapping has been a powerful tool for Belizean farmers, with 98% of all the fields in Belize's sugar industry mapped. The industry feeds info into that system and uses the information to analyze which fields are not doing well and what factors lead to poor results. The quality information allows for the creation of a color-coded map for farmers to see which fields qualify for harvesting and which don't.
We have a very simple way of showing that, which is like a traffic light. Green means go, yellow means wait, and red means stop. So very simple, and we color code their maps, and then the farmers already know, okay, green, we can cut these, yellow, we need to wait 2 weeks, and red, we need to stop and wait a little bit longer.
This technology is used along with information and projected to farmers in a way that's easily understood. While farmers aim to produce large quantities with efficiency, quality is given priority when it comes to harvesting.
At the end of the day, we have sugar to produce of very good quality. We have standards to maintain, environmental standards as well. And it is important that we maintain also the livelihoods of our people.
We won't harvest unless it meets the standards, the qualifications for harvesting. We have learned and we have teamed up with ASR and a Hershey program where we do pre-harvesting sampling. So I have an idea what is the quality, the productivity of how much sugar a certain field will produce, because we do pre-harvesting testing. So we would take samples, send it up to the mill, they would feed us back with a result, and then from there we would choose and make choices as to which field we will cut at a specific time.
Orange Walk Town is better known as Sugar City because, as the name suggests, the crop is vital to the economy of this town and the entire northern Belize. This is where the sugar factory is and is also home to hundreds of sugar workers, farmers, and their families.
Sugar dear, sugar the down ya.
Here in Belize, 5,200 farmers depend on it, and that translates to 5,200 families. At the mill, we have over 400 employees that directly benefit from this sugar industry and their families. For a small country like Belize, this population, that really means 15% of our national population.
If you go across CARICOM and to other sugar producing states, the numbers may not be as high as Belize, but in terms of significance to livelihoods, it's critical for them as well. We are at 40,000 persons indirectly across the regions. It's over 100 or so, 100 or more thousand people. So it's not only critical for Belize, but the survival of this industry is critical for CARICOM as a whole.
Belize is a little bit unique in the region in the sense that some chose to exit sugar. From a socioeconomic perspective, it was agreed about almost 20 years ago that we would remain in sugar, and that our rationale is the socioeconomic importance to the country. But also too, we thought then, as we still think now, that it is a viable option for agriculture production.
The survival of Belize's sugar industry has been largely a result of the significance of the industry to its economy, livelihood, and culture. Moreover, there's an undeniable commitment from farmers who strongly believe in its long-term sustainability, even as other CARICOM producers have declared that sugar is dead.
No, it's not dead. It's not dead. It's not dead.
Most of them are in this business because they love it, they like it. I mean, it's been their life. They grew being farmers. Their dads were farmers, their granddads were farmers, sugarcane producers. So we're trying to teach them that they can still be farmers, but do something else beside, like a side business.
We have managed to survive through us performing the labor personally. I personally, on the weekends, I need to do something in my field to help me save some money. So that is the culture we have had. Some farmers do their own mechanical husbandry or manually, but in a sense you're saving, your family helps you and so on. So that is the way that we have survived all those price drops.
And Belizean farmers remain motivated by their optimism that world prices will eventually rebound, even if not to the heyday of preferential prices in Europe.
It's going to rebound. And I want to ensure that when it rebounds, not only myself, but all other farmers who associate themselves with me will be ready. Exactly.
To reap the reward.
Yes. So I have told them we keep our heads high. We try to cut costs. You need to change. Thinking systems have to be changed.
I can say in the region we are unique because we have seen price drops have gotten people out of the industries. Nevertheless, in Belize, we have sustained.
This optimism is echoed in the government.
It will swing. I'm very certain that we will have the pendulum swing in the other direction, but I don't think we will be going to some of the historic highs that we've seen, at least from the Belize market makeup, simply because of Europe. But there are alternative markets out there, CARICOM being one of them.
With the outbreak of COVID-19 affecting tourism industries across the Caribbean, the significance of agriculture and local production has been heightened. Jose Alpuche, who at the time of this interview was CEO of Belize's Ministry of Agriculture, argues that countries should invest heavily in industries that contribute to self-sufficiency.
Belize is one of the few countries in the region that is self-sufficient in most commodities. We're a food plus country. That, quite frankly, is one of the hallmarks of your overall national security matrix. If you can't feed yourself, if you can't provide food for your populations, you're in trouble.
The Belize sugar industry produces enough sugar to meet the demand of the domestic market. Most of the balance is exported as raw and food-grade sugar products to refineries in the United Kingdom and the United States. Only about 3% is currently exported to CARICOM. However, Belizean cane farmers are well aware that despite their ability to produce, their survival depends on their ability to sell. They see CARICOM as a natural market. Alpuche argues that protecting CARICOM sugar, even at higher prices, is part of ensuring food security for the region.
I don't know if you recall after 9/11, some countries in the region were literally on the verge of running out of food. You recall they had closed down all the ports in the US and the airports and the rest of it. And what that showed back then is that actually food supplies in some of the Caribbean, the smaller countries in the Caribbean in particular, are small. They literally have a couple days or weeks supply of food in warehouses. You realize that the difficulty that presents when you have something catastrophic occurs. We have to build a stronger base. The best way to keep you dependent is literally and figuratively to keep you hungry. And we have to change that mindset.
What we want really is that we're able in this Caribbean, in these Caribbean countries to really support our small-scale farmers, support our industries that are making all this effort to produce sugar.
And while countries like Jamaica have been slowly exiting sugar, David Ackerman sees this as an opportunity.
I would say, okay, you want to do that? Allow us to sell you the sugar. Then we will plant for you. And let me tell you something. Sugar that's been produced in this country, it's grade A, okay? The yields that we are using to produce a ton of sugar, in fact, we are among the top in Latin America.
But it's not that simple. There's a 40% tax called the Common External Tariff, CET or CET, on all sugar produced outside the region. However, there's an exception for refined sugar, which can be imported in bulk duty-free for manufacturing. Belizean producers now say they can supply plantation white sugar, which they argue is just as good as refined sugar. So they want the CET to apply to refined sugar as well. Unsurprisingly, large manufacturers in CARICOM have fought this move. They argue that it would make their products more expensive and less competitive on the global markets. Belize's Director of Trade, Andy Sutherland, says the situation has changed and it's time for CARICOM to review that policy.
That time when those policies was devised, there weren't enough regional production of refined sugar to supply the domestic market. But that policy also gives room for a review. And that review occurs when industries within the region have built that capacity to be able to supply 75% or more of regional demand. And that's where we are now. Our industries have built that capacity to be able to supply white sugar to CARICOM.
What Sutherland refers to as white sugar is a Belizean product branded as plantation white sugar. To the regular Joe, it may look like refined sugar, but there are technical differences. Large regional manufacturers have argued that it's not good enough for their purposes. However, a study financed by the Caribbean Development Bank, CDB, last year has found that plantation white sugar can be substituted for refined sugar. In Belize, Bowen & Bowen, the franchise holder for Coca-Cola, uses plantation white. So too does the international chocolate maker Hershey's.
We were chosen for quality. So that by itself says something. Hershey's doesn't buy sugar from us and has not moved to stevia or corn or the other things that produces. Why? Because the sugar from here is meets the standard for their chocolate.
The industrial use of plantation white is proven here in Belize. So it's a hollow argument when they say they need higher quality sugar than what is produced here in Belize, and that can be produced in the region because it is being utilized here in Belize. The likes of Coca-Cola, for example, has always used Belize DC sugars in their processes, and the food-based industry here does the same. I can assure it's a price issue, it's not a quality issue.
Price, an inescapable variable in the world of business. And for industrial players who require vast volumes, Even small differences in price could make a big difference in profit. So why should they pay more? According to Belize's Director of Trade, Andy Sutherland, it's about fairness. He argues that other countries that sell us cheap sugar actually protect it in their own domestic markets.
Mainly because they're subsidized sugar on the international markets. The allegation is that it's dump sugar, it's priced below market value or production value.
Farmer David Ackerman says the low prices are the result of poor working conditions in those countries.
I mean, I'm reading in India. Lord, I mean, these farmers are being enslaved. They're getting 22 Belize dollars for a ton of cane because it's government controlled, right? And yet, India wants to do mischief. India wants to dump 5 million metric tons into the world market. Well, Australia says, we're going to take you to the WTO. You can't do that. Brazil says, I'm going to back you up.
According to Sutherland, CARICOM is one of the only regions in the world that doesn't protect its own sugar.
All regional integration movements that have industries, and in particular sugar industry, offer that level of support to their industry. The exception is CARICOM, and the SAC, the Sugar Association of the Caribbean, through the study that they got done by the company LMC out of England, highlights the fact that the CARICOM is probably the only region that doesn't provide that internal space for growth of its sugar market.
Meanwhile, Alpuche notes that other industries benefit from protection in CARICOM. He argues that it should be the same for sugar.
If you would look at production of everything in the region, whether it's from petroleum to beer and soft drinks and everything in between, I can find somewhere in Southeast Asia, in China, in South America, where everything that we produce here in the region can be done cheaper. Everything that's produced in the single market, I'm sure I could source cheaper elsewhere. That's the whole rationale for forming the single market and for protecting those industries that we believe are critically important to the long-term economic viability of the region.
I hope, for God's sake, these leaders, these Caribbean leaders, could put some sense in themselves, okay? And stop play and Nancy with we. We are a common market. We are one people. Basically, we were colonized by the same people. We speak the same language. We have basically the same customs. We eat, we drink, we dance about the same thing.
But after years of lobbying, Belize has made little progress with these arguments. As one of CARICOM's often forgotten states, its voice has been drowned out by large industry players with vast political influence in Jamaica and Trinidad and Tobago. And although the issue was considered at the 49th meeting of CARICOM's Council for Trade and Economic Development, COTED, in 2018, a spokesman for ASR-BSI, William Neal, complains the regional body has been extremely slow in formalizing those discussions.
We also managed to have an agreement at COTED, and unfortunately, the official minutes from these meetings, even though they're more than a year, like the 49th COTED, and we're at 51 now, I think we're 52, we still don't have the official minutes coming out of them.
But Neil says there has been some advancement in the form of a monitoring mechanism that has been agreed upon.
So at any given time, if we're producing if the quality and the quantity matches what the region is, then we'll stop getting extra regional sugar. But in the meantime, as you're doing that, what will happen with the monitoring mechanism is you're going to be able to actually utilize what is produced in the region first, and then you will be allowed to import from third countries.
In the meantime, Belizean producers continue to work on improving their production. Despite the challenges, they have not and clearly will not give up on sugar.
Honestly, yes, I have lost money, but I'm innovative. I'm waiting for the rebound because I have seen it. and I'm smelling it.
Up next, it's your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agent, Insurance Made Easy, and Massey United Insurance. How good is your insurance?
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange declined last week with the combined index losing 1%. 101 stocks traded across both the main and junior markets of the JSE for the week ending Friday, October 2, 2020. 38 advanced, 49 declined, and 14 stayed the same. Nearly 140 million shares changed hands on the Jamaican dollar market, totaling $821 million. Mailpack Group traded the most, taking up nearly 38% of market volume. The stock lost 1 cent to open the week at $2.02. Tropical Battery, which IPO opened September 22 and closed on the same day due to oversubscription, traded the second most, with people buying and selling nearly 18 million shares in the company. The stock gained 15 cents to close last week at $1.15. And Pulse Investments was also among the most traded, taking up 7% of market volume. The stock lost 33 cents to open the week at $4.65. Now let's see who else had the biggest gains. Productive Business Solutions, 9.5% cumulative redeemable, rose nearly 33% last week. The stock starts this week at $106. Caribbean Cream is up 19% to close last week at $4.63. And Key Insurance Company gained 16%, its stock ending the week at $9.57. On the losing side now, SSL Venture Capital Jamaica was the biggest loser. The stock dipped 24%. The stock was also the biggest loser for the month of September. SSL Venture Capital Jamaica opens this new month, October, at 56 cents. Epley 8.75% preference shares due 2023 fell nearly 22% to end last week at $6.71 a share. And with the closure of 2 cinemas operated by Palace Amusement, shares in the company dipped nearly 20%. The company announced the closure of Cineplex in Sovereign Centre, St. Andrew, and Multiplex located in Fairview and St. James last week. The temporary closure of both locations come within the context of the widening economic fallout from COVID-19. The stock will open this week at $1,300.07. Now here's a quick look at some of the highlights for the month of September. The main index advanced by nearly 3%. The junior market advanced 3%. The financial index advanced by nearly 3%. After a successful IPO, Barita Investments came out on top as September's biggest gain, its stock up nearly 81%. And Siboney Group was second for the month, up 45%. Followed by SSL Venture Capital Jamaica, stationery and office supplies was the second biggest loser. Its stock price dipped $1.40 to close September at $4.20. Market Recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Ideal Portfolio Services. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by Wealth Advisor at Ideal Portfolio Services, Dwayne Taylor, and Research and Strategy Analyst at Sagicor Investments, Jodianne Harris.
Well, look who's back, Jodianne Harris. It's been a minute. I hear you've been very busy. Sagicor's been keeping you busy, Jodianne.
Yes, definitely.
That's good. That means money is being made. Let's get this money, right, Dwayne?
Yes, yes.
All right. Well, we have a lot to talk about as usual. Right. Let's start with the latest GDP figures, the latest news on the economy. So STATIN is telling us what I guess we already knew. They're not telling us anything we didn't know. I guess apart from the precise numbers, so the economy contracted by 18% in the April to June quarter, just verifying what we already knew. It is a recession. So what are your thoughts on the latest numbers, Dwayne?
Right. I mean, there's so much to dissect from the information that STATIN provided. It really does give us a snapshot of what really was happening in the economy. We anticipated it, we expected that it would be high, but for it to be the highest that we've seen in, over 2-3 decades in history. You know, it's crazy. I mean, first thing we want to look at, you know, what are the real areas that have been affected by this? And I mean, you see it. You look at the manufacturing companies, you look at the distributors and how they've been hampered because of goods, raw material not coming into the country. We look at the financial sector, we see where companies aren't able to conduct business as they would want to because of restrictions with persons coming in or having to do deep cleaning for different office spaces. So right now we're hampered in a significant way, and it's really more or less trying to figure out how do we navigate this time. I know that the finance minister, he was mentioning that, you know, the future is positive. You know, he's been optimistic, and we have to be optimistic in a time like this. There's no other choice. But the reality is we have to also adapt. And I think that's one of the issues that we've been seeing of late. Companies have not adapted to this period of uncertainty as yet. Some have, don't get me wrong, some have, but we're still trying to figure out what's the best way moving forward. But still, there's a lot to dissect. I don't know if Jody would want to jump in on that.
Yeah, any surprises, Jody, or was it all expected?
I mean, when you expected the downturn, I think one of the things we're seeing coming out of the numbers is really the linkages between sectors. So I know that the government has been working to improve the linkages between tourism and the other sectors in the economy, like agriculture and tourism. And, you know, when things are booming, it's really great to have that sort of linkage. However, when it is that the tourism sector now declines by about, I think it was 80-something%, then you're going to have that spillover effect in areas such as manufacturing and agriculture, as well as the concept that your economy had really came to a halt in the early part of the quarter, the April to June quarter, with some areas being shut down, curfews. It would have impacted the entertainment sector. And so a lot of what we saw was expected, the downturn that was there. However, just to see how it plays out, I mean, there are certain things that you probably, in your own looking at assessment, you weren't thinking would have been as negatively affected as they were. You know, if you look at transport, you know, storage and communications, I mean, communications would have possibly experienced a boom, but on the other end, there were no flights in, no flights out, as well as just reduced movement of people would work from home. So there are always some gains and some losses, or winners and losers. And so we saw a lot of that playing out in the numbers. Some of it we expected, and then there are other areas that we weren't paying as keen attention to, that we got some information on as to exactly how they were, to really quantify how it is that they were impacted by.
Like which ones?
Whole COVID. I think when you think of like the entertainment industry, that would have been one that would have been impacted. You know, you're shutting down of.
That was in the numbers?
Yes, entertainment would be reflected, I think, in the other services.
Oh, and other services was down like 44%.
Yeah, because in that area, you'd say entertainment as well as the adjoining services to tourism. So, for example, attractions and stuff like that would fall within other services. So the hotels and restaurants would just be the hotels and the accommodations and the eating out portion of it, but your Dolphin Cove and your Duns River Falls and stuff would now be reflected in other services along with entertainment services. So, I mean, you're able to now quantify the impact that the curfew measures would have had on areas such as those, and to kind of get an idea what it will be going forward.
Let's look at some companies' news. So we see GK has done some shaking up of its upper management, and they've also announced the new mergers and acquisitions unit. What does this tell you, Dwayne?
It's exciting. It's really exciting. So if we noted that they're just coming off of a very strong quarter, and recently they had implemented their digital transformation unit. So we've seen where GK is making a lot of positive moves in the market, you know, especially when you think about embracing a technological age. The fact that they've revamped their digital transformation unit is excellent. But now for them to commit a unit to mergers and acquisitions just shows their intent in the market. They've been very clear that they're trying to bring in at least 60% of their revenue from the international market. And prior to this, they would have had, I'm sure they would have a strategic team that would have handled the acquisition of some of the companies that fall under them, but no, for them to establish a department that handles that solely. And the fact that they have about 10 projects in the pipeline, that's big news. So they've been one of the companies that we've seen that has been resilient despite the COVID pandemic. So it's very positive for the company. It's very positive for Jamaica. It shows that despite all of this confusion and mayhem, we still have a company that is staying strong, that's still growing. And hopefully through this establishment of this new unit, we'll start to see more revenue coming into the country. Yeah.
Have they given any indication what they're looking to acquire?
So based off of the article, they didn't get into details about what it is that they were looking to acquire. So I guess we'd have to wait for them to share some more information on it. But right now it's tentatively 10 different entities that they're looking at.
The market has been rather active in the past few weeks, and companies have been having their annual general meetings as well, virtually, in person, and they're having that combination. Sygnus has announced some news. Their shareholders have approved their additional public offer. Is this one you're looking forward to, Jodianne?
I'm definitely, I think you want to see a little bit more feel of what the market is thinking, where investors' minds are. We have been seeing, just in terms of trading activity since COVID, you saw the big pullout of persons, and activity has not been as robust as we're used to probably in the past 2 years. I think during the April to June, when you had the whole shutdown, persons were on a wait and see. And similarly for companies, you're at a point where you were looking to say, let me hold off. If I had plans, let me hold a bit to see what the uncertainty is. And we're really getting now to a point where we're adapting, we're learning to live with COVID. And as such, companies are trying to continue to do business. And as such, it becomes important to raise capital. I think Sygnus is just one off. I know I saw Sterling is planning to do something. So I think a rights issue, as well as Dermon is thinking of an APO, and we know Key is thinking of a rights issue. So companies are slowly coming back to the market at this point to raise more capital. Sygnus, I think investors will look at the performance since they have listed. I think they came to market in 2018, having been a fairly new company. They have been, I think they were about 6 months operations at that point in time, and they have been doing well. So investors are going to assess the stewardship that the company has displayed with the funds that they raised 2 years ago. And we have seen where quarter after quarter they have been giving positive results. Sygnus operates in somewhat of a niche space. I mean, the type of companies that they target or they work with are not ones that are normally treated by the traditional banks or the traditional investment house. So they go for what you call your middle companies, they're about your middle market companies, and they are expanding. So we see a lot of in 2019 into the early part of 2020 where they are expanding their footprint into the Caribbean. And so they are doing work, and I'd expect that persons will put money into a venture like Sygnus because they have been faithful, you could say, in what it is that they have been given for the past 2 years. I think year on year, you saw where the profits were fairly flat, and a lot of that the year would have ended in June of this year. So they would have felt some of the impacts already of COVID on their financials. You saw where their expected credit losses would have increased, and as such that would have impacted. But to have a fairly flat, I mean, there's a little dip in terms of net profits in a period where you would have experienced some COVID would have been very admirable. And as such, I expect that persons will put some funds into Sygnus based on the fact that they have rewarded shareholders thus far.
Dwayne, what are your thoughts on Sygnus in this climate? So Jodianne mentioned their performance, especially recently, but they are a financial sector which has been hit. They're also invested in tourism somewhere in the Eastern Caribbean, I think, Southeastern Caribbean, and that's been hit. So what are your thoughts on them in this investment climate?
I think Sygnus has shown that they have the ability to identify opportunities, excellent opportunities at that. When it comes on to the fact that they do credit investments, so really they're helping other entities with building out their companies, for them to be able to recognize who has that potential for growth, for them to recognize that the business model that those entities have are sound, and that they would also have the ability to repay on their commitment, shows that they do have a skill set in identifying good opportunities. And Sygnus is one of those companies that, because of their uniqueness in the market, as much as, yes, they're experiencing a bit of a downturn based off what Jody had just mentioned, the outlook for them is very positive. And I think them opting to go and do this APO is probably the best thing that they could do at this time. And in all fairness, Barita and NCB have kind of cleared the way for them to capitalize on some of that money that's in the market. You know, they have.
I think companies like Sygnus are waiting on somebody else to test the waters.
Exactly. You know, they've revitalized investors' confidence in the market. And, you know, even just based off of the performance of Barita this past week, and you know, Tropical Battery being listed and being excited about where that's going, I think investors are keen to support these companies that we know have the potential to further expand and grow in the market. So I'm not worried about them. I'm actually excited about this APO. I'm excited to see how it performs and what they'll use, the projects that they have planned, because they did mention a couple that they have some in the pipeline. They didn't get into much detail, but it'll be exciting to see what they're working on. Yeah.
Looking forward to it as well. Thanks, guys.
All right, thank you, Kalilah.
Good discussion.
Alrighty.
This segment of Taking Stock, The Analysts, was brought to you by Ideal Portfolio Services. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at takingstock-ja.com and turn on those post notifications so that you can be the first to see all of my videos. We want to help people learn more about money so we can all get this money together. Now this week on Money Mondays JA, we're taking a closer look at Sygnus ahead of their additional public offer. And on Money Moves JA, Dr. Christopher Malcolm is back to help us with dispute resolution. Always important to know how to solve those disputes. Follow me on Instagram and Twitter at Kalilah Ray, and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. Now tell a friend about Taking Stock. Investing is the new sexy, so let's make it cool to talk about money. I'm Kalilah Reynolds. Stay safe.